What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our FANGMAN stocks. That, of course, means Facebook, Apple, Netflix, Google, Microsoft, Amazon, and Nvidia. First up on the chopping block is Facebook, and by the way, on the left-hand side, we have the daily time frame chart, and on the right-hand side, the 30-minute intraday time frame chart. So Facebook up first. What do we have going on here? Certainly a nice flag that's trying to form, but you can clearly see on today's session, back down at the lows, equal lows are setting up a flush point, especially with the lower set of highs that have formed in the prior 2 days, right? So sure, we are still technically holding up in the flag, but instead of looking for the breakouts, instead of holding up at the highs, we're back down at the lows, right? So start looking for the breakdown and just continuation of the daily trend, which we know has been down and firmly down ever since the earnings gap down conundrum, right? So that's what we have on our daily time frame chart. If we break the 202.50, look for the equal low here around 190, and it might seem like a lot coming all the way back down to those panic lows from the invasion day, but it certainly could be on the table if we just get basic trend continuation. To the upside, if there is a reversal, so some sort of look below and fail, any recapture of the level takes us back to the top of the range, which I would start to call at 212.44, all right? So on our 30-minute time frame, we can see this much clearer. If we also take out a resistance trend line, we can come in and do something like this. Any sort of bounces here that produce a lower high underneath the resistance trend line and then another equal low at this 202.50 sets up the breakdown, right? And look left, fairly poor structure on the way up. I would imagine that we can move through it with relative ease. I'm not saying we move in a straight line all the way down to the lows at 190, but it's not like there's a huge shelf of support which buyers are going to try to defend, right? Very thin structure on the way up should lead to a fairly easy retracement from that perspective. So that's our downside play. Another thing to pay attention to is if you're not comfortable with taking the first break, you want more confirmation, then watch for something like this, a break, retest, and then rollover, right? So you could either watch for double tops on smaller time frames here on the back test of 202.50, any inverted head and shoulders, double tops, not inverted head and shoulders, regular head and shoulders, rather inverted hammer, correct? Something that looks like this, just a candlestick that would indicate some selling pressure on the back test, right? So that's a possibility as well. To the upside here, here's the only way I can see you playing it long. So if this bounces, gets to the resistance trend line, we produce a higher low on the smaller time frame and then reattempt it, maybe that's a break to fill up the triangle. And the triangle, of course, is this one right here that I've just drawn in. Your target's the top end of the range. And from the daily, we would just be playing ping pong, right? That's the ping pong trade back up towards the top. So that's what we've got inside of Facebook. I suppose there's one last possibility, which would be the look below and fail, as we pointed out. And again, that would look something like this. And instead of resisting on the back test of 202.50, we get price acceptance back within. That's a long trade before we even break the resistance trend line, looking for the rotation to the top of the range, noting that the sellers have failed to materialize underneath this very obvious flush point, correct? And again, knowing that there's thin structure here, if the sellers can't get through it, obviously that's telling you something that they're fairly weak or the buyers are just really responding and we can get that movement back higher. Okay, so that's Facebook in a nutshell. Let's continue along and talk about our good old AAPL, 2 A's, 1 P, and 1 L. There we go. Struggling to type. Anyways, zooming in on this one, let's flip tools and get a closer look. What do we have going on here? Opening on a gap up on today's session. That was fairly cool. However, you'll notice we didn't really hold that gap, right? We certainly moved lower and into the prior day's range. We're also underneath now that 167 pivot, 168 pivot zone. Treat that as a zone, right? Here's your two equal lows that really flushed hard there. But in the past, 168 was held almost to the penny on multiple instances there. So that's why we're treating that as a zone. As of right now, from the daily, I would keep it really, really simple, right? You can clearly see we have a day up, a day down, a day up, a day down. It's really, really choppy on the intraday, but again, keeping it simple from the daily perspective, what do we have going on? Bar by bar, higher lows, bar by bar, higher highs as well. So short-term uptrend is technically intact. If we look at the 30-minute time frame, this is going to make it tradable here, essentially, in my estimation, right? We're going to start to call this a pivot right here. Let's grab the other tool once again. There we go. So 165.50 roughly. It's also your 30-minute 50 SMA, the blue line on the chart. You can see how it was resistant here, and then it was supportive right here. So if we're above that, I would just watch for chop here, okay? You can clearly see with all of these horizontal lines and levels we have going through, it's going to be really tough to trade in there. I'm not saying you can't take quick scalps in and out, but from a directional overall perspective, something that I could comment on in this video, nothing really clean is going to be produced in that level. You're just going to be looking at a bullish hold essentially of these higher prices. The next trade is long over the top of 168 for the move into 171, right? So hold in there. long over the top if it wants to go tomorrow. If we break down here, what does that put into play? Look above and fail. We know the target should be the lows here around 162.50. Okay, so that's really what I would focus on in Apple into the end of the week. And again, that pivot number is 165.50. Also the 30-minute 50 SMA here, the blue line on our chart. So that's how I would keep it simple. Let's continue along here, move through our companies. We have NFLX for Netflix, our next contender in the FANGMAN lineup. Let's adjust this because, of course, earnings had to throw a wrench in everything, make the chart really ugly, difficult to look at. Nonetheless, what's going on here? No gap at all. And remembering our bar-by-bar perspective, we have highs, lower highs, lower highs, lower highs. We have lows, lows, and lower lows. So short-term downtrend is in effect inside of something like Netflix. You can clearly get the sense also that we have highs, lower highs on a broader scale, and these equal lows will be the target, right? We're looking for trend continuation. Is this going to turn into a massive descending triangle and flush over the course of time? We'll see, one step at a time, but no doubt breaking these lows right here at the 376.80 was a bearish move. We're looking now for that equal low here. Obviously, big red-bodied candle indicating that the sellers had the momentum on today's session, okay? And once again, you can see this flush point on the 30-minute time frame. So here's some scenarios to watch out for in tomorrow's day worth of trade. If the move is higher, look for anything, once again, that back tests here, inverted hammer, even just indecision dojis that would indicate a lack of strength from the buyers. That's a short opportunity on the break retest, looking for the rollover again to take us to 352.67. We talked about that on the daily. Just to illustrate what that would be, it's this, right? The other thing would be if we never make it above this high right here, you're looking for any reason to get short, right? If you look at this through the lens of Fibonacci, let me take out that tool. Oops, we want that one right above. There we go. Coming in from the highs all the way down to the, let's go to the first low where the first consolidation happened. Let me zoom in. You'll notice that the highs, the dead cat bounce, never made it anywhere close to the 38.2. That's an extremely bearish indication in itself. So anything that remains down here is bear flag consolidation. Flush of the lows takes you lower as well. So those are the two primary trades I would watch for inside of Netflix. Nothing really to do long here as of right now. If it's going to be long, it's got to be a look below and fail, recapturing all the way above that flush point at the 376.80. Maybe there's a rotation here, but this is not the name to be pushing your luck into the upside in my estimation. It just, it looks relatively weak based on everything we've seen so far. Let's continue along and talk about the G for GOOGL, Google. Zooming in on this one, I kind of can't wait for the post-split to see what the options volume is like. I mean, this is a pretty tough trader in terms of the liquidity right now. I hope after the split we get some better liquidity in those options, but we'll see. We'll see. For now, better balance, still intact, right? So let's go ahead and throw some levels on this daily chart here and start talking about scenarios on the 30-minute. I mean, clear as day, right? Look at this. Beautiful here. So anything that breaks down underneath 2660, that's a flush, obviously bringing us closer to this set of lows here, 2560. So about a 100-point move inside of Google available to the downside if we break the range, right? So that would take us somewhere in here. Again, look at the structure on the way higher, fairly thin. There's not a whole lot of support in that general area of the chart. Now, we did print a 30-minute hammer into the close here, so maybe it's the ping pong trade, right? And we head back up towards the top, we do something like this and continue to balance out, and it's a patience play until we can either take out the top or take out the bottom. Again, being in the midpoint of the range, that's never really where you want to initiate new positions, and because that hammer has placed us there, I would say patience is probably the move here inside of Google, at least earlier on in tomorrow's session. If we do continue to produce lower highs, so from here to here to here, and then reattempt the lows, that does start to become a little bit more attractive for the flush, correct? So keep that in mind as well. But patience, right? Patience, don't get too trigger happy on the open here because we are smack in the midpoint of the range. To the upside, if the top breaks, what's our target going to be? The 2-day highs from here, also the daily 50 SMA, roughly around 2762. Very interesting there. Lots of 60s in place. 60 level, and 60 level here. Interesting. But nonetheless, that's what we have in Google. Not a whole lot to read into any more than that because we are stuck in an area of balance right here. So next up on the chopping block for M is MSFT for Microsoft. What's going on in this name? Gapping up today right into the resistance trend line. And again, we mentioned this in yesterday's video that we were going to be careful in this one as well as Nvidia because of what we had above, right? This resistance just ahead didn't really make sense to trade long into it, and we actually pulled back off of it. So from the daily, sure, you could start to classify this as a look above and fail because we did not hold the gap fill and then rotate back higher, the hold of 300, right? So this is still a pivot. We're now underneath it. We're looking for more balance to continue. We did create a very slightly but nuanced higher low. You can see this on the 30-minute time frame actually. So from here to here, slight higher low. It doesn't mean that it's bullish, but it's just not outright bearish as of right now, correct? So Keep in mind, same thing that we just discussed in Google. Here's your midpoint of the range. Technically, we did get the look above and fail. The target is always the bottom end of the range, but are you going to start initiating a new position here? Probably not, right? The trade to take was the breakdown here of 300, and now you're either holding it at the midpoint and you've trailed your stop lower, or you're just being patient for the next setup. There's nothing really to do in the midpoint of this overall chop. So be patient. If we come back down into 291.25, that is the low end of the range. I wouldn't call you crazy if you start seeing hammers that print here to take a stab long. Looking for the rotation back higher to 300. Stop goes into the low of whatever reversal pattern or candle formed. Could also look like a short-term double bottom, right? Break of the neckline takes you back higher. That's a possibility as well here inside of Microsoft. And then if we break the 291, that's where we're clearly looking for lower into this 286, we'll call it for round number sake. Again, being so middled in the midpoint of the range, no, middling, midpoint of the range, you get the gist, right? There's no real action to take, as I've sort of hammered home with Google, right off the open, unless we open closer to the top or closer to the bottom for the 930 bell. So patience play here inside of Microsoft. At the top of the range, 300 is recaptured. We break the resistance trend line. We know there's some clearance into the daily 50 SMA, the blue line, and roughly 311. I don't really see that as a likely scenario given what we saw today. And again, if you just think about our highs and lows from the 30-minute perspective, we have this lower high, lower low, lower low. We are technically in a short-term little downtrend here. The only thing that would reverse that is taking out this level here around 298, maybe start looking for longs and anticipate that break here. But one step at a time, all right? So that's Microsoft. Next up, we are going to look at AMZN for Amazon. Almost through our FANGMAN companies. I appreciate it if you stuck around this far. Big outside day on today's session. That's certainly a bearish indication, right? Bearish engulfer here, outside day. You can see that we had a higher high and a lower low, completely engulfing the prior, I would say 3 days worth of, almost 3 days, really 2, but that high in here is so close. I would just start to call it 3 or 4 days worth of range. That's a really bearish indication. We've also closed underneath the lows here. And again, looking left, there's not a whole lot of support on our 30-minute time frame until we start coming closer to, and we actually did almost make it there into the close, that 29.32, and if that breaks, it's back down towards the lows of the panic day, the invasion day, right? So really be careful here inside of Amazon with the bearish indication that we're looking at. Again, this outside bar is nothing to really joke about. You can see the power of it, right? So a little bit of a dead cat bounce, couldn't even recapture that level, and major flush, right, into the close on an increase in volume. So there's no real long trade to take right here as of right now. I suppose if you're a really, really aggressive trader, you like pushing your luck, especially with Amazon weeklies set to expire tomorrow, maybe it's a stab long over the highs for rotation back here with a stop there. But you're pushing it, right? I wouldn't really risk any more than you can afford to lose in terms of profits that you already have on the week if you trade the 0 DTEs on Amazon here for that specific setup. Again, 2 hammers, maybe the buyers are going to step up. Maybe this is a little bit extended. But for me, I would rather watch for something that looks like this. This is kind of the theme of the video, right? Any break and retest of that level here. So 29.85, look for the same things, double tops, head and shoulders, inverted hammers. You get the gist. That's your short entry looking for an equal low, if not continuation to the downside. So that's Amazon in a nutshell. And again, think about your highs, what's going on with them. There's your high, low, lower, low. Short-term downtrend is in effect here inside of Amazon, okay? So bears are sort of more firmly in control here based on the psychology of what we've just pointed out in this big red bar. Think about this as well. All of these people who are anticipating the bull flag breakout from this level, they're all now definitely 100% underwater, right? You can clearly see no matter where they entered, if they had the best possible location in the lower wick right there looking for the rebound, we're technically underneath that. They are underwater on the trade. So we'll see, but it does look like all of this could flip to overhead supply if we cannot immediately recapture some of these levels. And again, the bears seem to be in full control here, initiating the new downtrend. So highs, lower lows, lower lows. You get the gist, right? So that's Amazon in a nutshell. Let's continue along and wrap it up here with our last company, NVDA. There we go, Nvidia. Zooming in on the daily, stuck in balance, still perfect levels, right? You can see this is what we have going on here. There's, because we're closer to the lower end of the range, I, again, wouldn't call you crazy for starting to think about longs down here for the rotation back higher because we've been stuck so cleanly in range because we also have the daily 200 SMA supporting there. Again, stop loss goes just here, looking for the top. Makes sense from a risk-reward perspective to pursue that trade to the upside. From there, we're monitoring for continuation into the daily resistance trend line, if not higher, into 257. So this one is not clearly exhibiting the bearish nature as many of the other companies that we've looked at so far in today's video. So keep this one on your radar if we do need longs and the broad marketplace really starts to get picked up into the Friday close here of the week. So Nvidia Keep it on your radar, closer to the support portion of the channel that it's been trading in. We'll see. Could have all of the same scenarios that we've discussed with everything else, right? Could do something like this, look below and fail, targets the top end of the range. Could do something like this, break and retest. Then we're looking for continuation lower into 218. This support in here, roughly 222 actually, the low end of that flag. Even the breakout point 225. This general zone is going to act as a magnet because that's all there is for value. You can see that poor structure move higher, right? So all of those same scenarios will apply to Nvidia, and the levels to pay attention to, I'll just say them out loud. Here we go. This one is 233.60 and the top of the range is 244. All right. That's what we've got here in our FANGMAN companies. Hopefully you enjoyed today's video or learned something new. There are some pretty decent lessons in there, I think. If you did, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.